Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, November 30th, 5:25 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Before we get started, I did an interview today with Chuck Jaffe of Money Life Show. When we'll get that posted to YouTube and/or the website when that becomes available, it should be published tomorrow. Interviewed me about our process here at Revere and a little bit of our current outlook. So state of the market, we're in an uptrend since the November 1st and 2nd O'Neill follow-through days. You can see the trend gauge over here. Leadership took a bit of a pause today, actually really more of a mixed bag than a pause, but still with the green arrow. Short term, all 5 of the major indexes trending above their 21-day exponential moving average. That's a green arrow. Same thing with the medium term 50-day moving average. Long term, small caps took a shot again at the 200-day moving average, but were turned back. So we stay neutral there as mid and small. The slopes of the line are down, mid caps above, but the slope of the mid cap line is down. Sticking with the yellow arrow there. So what happened today? Another lagging day for the Big-7, but that was really the only drag on the market. 4 of the 5 of the major indexes were green, and the equal weight additions of the S&P and the NASDAQ 100 outperformed and finished higher. Here are the final numbers. The Big-7 down an average of 1.13%. RG8, this is our 8 growth ETF composite, up 0.35%. S&P 500 red most of the day on a 4-hour trend lower, but really strong close, up 0.38%. Equal weight even better, up 0.85%. And we bought the equal weight index today while we trimmed some QLD as the QQQ continued to lag down 0.25%. Equal weight NASDAQ 100 finished positive. Dow, the leader today, up 1.5%. Mid caps up 0.57. Russell 2000 small caps up 0.29. Global 60/40 stocks up, bonds down, net just barely positive, up 0.02%. And we were flat in-house on GROTECTION today. Let's get into the charts and the tail of the tape. We'll start off with the S&P 500, and we're seeing exactly what I wanted to see, which is a bounce at the 8-day exponential moving average and a close at the top of the range. So let's go to the 30-minute chart here, and we can draw some lines, bring up the line pen. So there was the move up. There was a second move up. Then we went into this tight consolidation, failed breakout yesterday, but held the bottom of the range, this 45.25 to 45.40 level. Touched it a little bit, strong close right back up to that 48. There's that 45.68 level again. That's right where we closed, got as high as 45.70. NASDAQ 100 dragged down by the Big-7. You can see the failed breakout. We actually broke below the low of this range intraday, but got back inside the range by the end of the day. So what we'll be closely monitoring the Big-7. Apple and Microsoft holding up okay. The other 5, not so much, but backing off the throttle on the QQQ for right now via the QLD and flipping to RSP as we're seeing a lot of rotation going on. And rotation is good. Rotation out of tech, out of the Big-7 into other sectors. So the broad S&P will benefit from that. The equal weighted S&P will benefit even more from that. Here you can see the undercut and reclaim of the 8-day exponential moving average on the NASDAQ 100. That's a big positive sign. Undercut and reclaim this pivot of 387.98 also. That's a plus sign. Maybe the strong close got out the sellers, but then again, Tesla week after its underwhelming Cybertruck release today. They delivered 10 Cybertrucks, big deal. Moving on, Dow Jones Industrial Average, the big leader today, higher high coming into this 36,000 level, up 1.5%. Mid caps continue to hold above the 8 EMA and the 200-day moving average. Failed breakout, but right near the top of that recent consolidation range. Certainly acceptable. In IWM, we've said what we wanted. Break and a back test and a hold of this 200-day moving average is what we want. So 3 fails in the last 2 weeks at that level, but not failing, but not going from failed moves come fast moves in the opposite direction, as we're still near the top of this recent consolidation. So all in all, there's I'd say more bad continues to outweigh the good, even though we did trim a couple more positions today, but that was mostly some leaders that were extended pulling back, and I'll talk about that when we get to the tail of the tape. Let's go to the VIX. VIX closing near the lows of the day, above the 80 EMA, but poked back below it, down 0.5% on the day. The dollar was very strong today, gapping, closing back above the 8 EMA, something we need to keep an eye on, up 0.7% on the day. It impacted gold, as gold was down just a bit, 0.42%, but gold stocks shook it off positive. Nice tight range here at the top after this big up day on Tuesday, up 0.4% on the day. And silver, SLV, up 1.1%, making new recovery highs. Bitcoin consolidating today, kind of still hanging, failed breakouts above the recent range, but not breaking down either. Up 0.2% on the day. Let's flip the bonds now. Bond prices were weak, which means yields rose. Broad bond index down 0.33%. The long bond TLT down 1.16%. That means rates higher. 30-year up 1.4%. The 10-year up 1.9%. So bit oversold, bit stretched to the downside on yields. Not surprising to see them pop. We want to see if that's something that's going to stay, or if that's or if lower rates are going to continue to benefit the market. Let's go to the tail of the tape now. You can pause this. I'll hit the highlights before. The open PCE inflation data was mostly in line. OPEC announced that they plan to cut production by another 1 million barrels. Not a big impact on the markets there. In fact, we had a decent gap up on small caps by 0.8%. And again, they closed higher today, but off of their opening lows. Day count, C6 with a failed breakout to 7-day consolidation now, 21 days above the 8 EMA, although we did have a bounce there. We touched it today and we undercut and reclaimed it on the NASDAQ 100, 20 days above the 21-day moving average. Talked about the action. Let's talk about sectors. XLF, I, P, and V. So that's financials, industrials, staples, and medicals led today. That's good. Rotation. Oils also volatile day with that production cut. They were up, down, and then regained some strength. Gold weak, semiconductors weak, cloud stocks weak, cybersecurity weak, XLC, XLY. That's discretionary and communications weak on the day. What do we do in house? Gap up on snow. Bought that, starter position in that. No add on to that, as it just basically closed just below where we bought it. And as I mentioned, we bought that RSP. Our sale on SPXL earlier this week was at the S&P 500 being at that 45.56 level. So when we regained that after spending about a day and a half below there, that's why we decided to put some of that broad exposure back on. We did it via RSP. That's the equal weighted S&P 500 index. Meanwhile, the weakness in the Big-7, we trimmed some QLD, trimmed some Datadog. Let's take a look at that. DDOG gap up, ran into the 120 level and got +4 ATR extended from the 21-day moving average when it reversed there. We booked some of our gains in that. We also trimmed DUOL as we got back near break even on some of our more recent buys on that, as it broke the 8 EMA with slightly above average volume. So booking tiny gains on DUOL, a little bit better on Datadog QLD, tiny losses, and we bought Snow. So net, our exposure, small decrease from 1.35 to 1.31. Bottom line on the day, strong close with 4 of the 5 indexes higher, including the equal weighted index, or in addition to the equal weighted indexes. Big-7 lags again. We're keeping a close eye on those. Leadership mixed. Let's take a look at a couple of charts. How about let's look at Snow since we bought it. Very strong gap near the top of this recent base, 470% above average. Nice numbers. They're profitable now. Closed a little bit below midway of the range, considering some of the headwinds the market was facing today. That's a pretty strong close for that, and we'll take that. Another gap up today was Nutanix. Already had a run from the bottom base to the top of the base, so I wasn't really interested in that for that reason. Maybe if it can form a base and go again, but big volume and a gap up. And a lot of these gaps higher are holding. That's the good stuff. I also talked about how crowd was strong yesterday. And in the face of the market pulling back, uh, continue to go higher again today. CrowdStrike very strong. We're looking for a low risk entry to add to our existing partial position that has about 30% gains now. PDD, another holding of ours, had a nice day, 3-day higher high. I think this might be actually our largest individual position now after some of the trims. We have a half a size in this, 4%, up 4% on the day. So some of the winners from earnings are continuing to go higher. Let's see, what else do we want to look at here? How about after hours? Some winners today. Some big gaps higher on their earnings report. UiPath up 11% after hours. IoT up 13% after hours. That'll put it at the top of a base. And ESTC, 3 software stocks, up 15%. That'll put it gapping out of this current base that it's in. So some continued great actions from some cloud/software stocks, including cyber stocks. And that's kind of where we've been focused lately. In addition, gold, GDX, gold stocks continue to act well. ITB, building stocks, initially gapped down but closed near the top of the range of the day as they put in a nice tight 3-week sideways pattern here after a move higher. That'll wrap it. As always, like to hear from you. The email is don@revereasset.com. You can also comment out on our YouTube channel. I reply to every comment that's out there. Or if you're interested in becoming a client, my partner Dan Stewart is dan@revereasset.com, or you can call 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. A little bit of a pullback the last couple of days. We've lightened our exposure, get rid of the weakness, hold on to the stronger ones, get ready to water new emerging flowers as well as the existing ones that we have, and see what the market brings us as December opens tomorrow. That's going to wrap it for Thursday, November 30th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.